Hello, everyone. Luke Broyles here with my acquaintance up to this point and hopefully now friend, Rajat Soni. Thank you for joining. Really appreciate you taking the time. We've actually known each other via text and WhatsApp and DM and group meetings for about probably 8 or 10 months now, but this is one of our first times talking one-on-one. So I've been looking forward to this.
I've been looking forward to this too. I love your content. I feel like there's so much to learn. Both of us can help each other's audiences just learn as much as possible. So always some synergy there.
Yeah. Great. Well, where shall we start? I think we should start with those three letters, their after name of chartered financial analyst, right? So, what is your background in that world? You have traditional finance experience. How on earth did you come to Bitcoin from that?
So I worked in fine. I worked as a bond analyst for a while. I'm not sure if everybody knows what bonds are, but it's basically just debt. So you can buy and sell debt. You can make a certain yield. I used to work in that for a while. It was kind of weird because there were these large financial institutions like insurance companies, massive companies that are trying to chase 1 or 2% returns, and they're paying 1.5% in fees. So absolutely insane in that way. But I was working in that, and then the pandemic happened, the lockdowns and all that stuff. And it gave me some time to start listening to podcasts, start listening to just different things. I read the Bitcoin Standard, which is right behind me there, and it really changed my mind, man. It opened my eyes to something that I had never even thought of before. You know what I mean? I think there's a point for every Bitcoiner where they didn't think about money. There's before and then there's after. And I'm on the after part. I'm definitely like before I was clueless. Now I feel like, oh man, this is something that just opened things up for me. I quit my job during the pandemic, during the lockdowns. I started posting on Instagram, on Twitter, just teaching people personal finance. And then more recently, I started talking about Bitcoin as I became orange pilled. Yeah.
Yeah, yeah, that's crazy that you don't feel like you understood what money was before you found the Bitcoin standard, before you found Bitcoin. And now I've heard that enough that I've kind of gotten desensitized to it. But a lot of people listening maybe not have heard that as much. So how is it that you could be in the bond world, trading bonds, working with these big companies, right? You've gone to school, you've learned it. I mean, how could you have possibly not known what money was? Could you break down to that? Why do you think that you didn't know? And I'm assuming you think that most other people in traditional finance probably don't understand. So how can someone be in an industry for so long, educated in it, working in it, but not actually understand what's going on?
Oh, absolutely. I think the main reason is that we just assume that the US dollar will be around forever, right? We just assume that we don't really see a different perspective. We don't see it from a different angle. We don't see it from the perspective of somebody in, let's say, um, Nigeria. I have a couple of friends in Nigeria who are actually saving in Bitcoin because the US dollar is broken, the naira is broken. We don't see it from that perspective because the CFA is it's a chartered financial analyst, meaning that they're basically trying to find ways to avoid inflation, right? They're trying to find ways to help people build wealth, help people earn cash flow, help people buy as many assets as they can. But the problem is that it's at the expense of everybody else in the world, right? And you don't really think of it that way when you're doing the education because it's just assumed that the US dollar will survive forever, right? And once you see that the US dollar could be a problem, and that book really got me thinking, right? It got me thinking because before I read that book, I didn't completely understand the value of gold. I don't really think most people who are gold bugs don't I think they don't truly understand the value of gold either. But once you start digging, I'm not saying that that book is my only source. After reading that book, I had more questions that I had answers. I had to search them up. It took time. It took, how long do you think you studied Bitcoin for?
Thousands of hours at this point, thousands, and that's
Yeah,
not similar. Yeah, yeah,
thousands.
long
Yeah,
time.
that sounds about right. Yeah, that sounds about right. Thousands. That's what I would say too. But the thing is that those thousands of hours included on top of those thousands of hours, I also understood the financial market, like the current legacy market that we have. And Once you connect the dots, it's very hard not to see where this is going, right? Because I have the CFA, I have to tell people, oh, there is risk. I mean, maybe there's a 0.01% chance that it fails. I don't tell people to just go ahead and buy Bitcoin. I tell them study it, understand what it is, make your own decision, right? I think that's the most important thing. Most people who are buying it blindly, they're gonna sell it early, right? They're all gonna sell it early. They're all gonna burn themselves, and that's a problem for a lot of people because what they're doing is they're accumulating this Bitcoin, they're accumulating this asset, but they see a higher price and they think, I'm a genius trader. But you don't trade your Bitcoin. You don't get rid of your. This is something that Oliver Velez talks a lot about. You don't trade your freedom for pieces of paper, right? And it doesn't. Okay, so there's something going on where the U.S. government has what 200,000 Bitcoin or something like that, and stupidly enough, they're selling it for something they can print, right? When you think of it from that perspective, it just makes you think how this financial system is completely broken. The people who are running it don't understand really anything, right? And then I guess once you keep digging into it, once I dug into it, I mean, it became obvious, man. There's no way that that Bitcoin isn't going where we think it is. I mean, there may be, like I said, there may be that 0.01% chance or that 0.1% chance, but I think it's more likely that Bitcoin goes to millions of dollars, hundreds of millions of dollars, than it is that it would go to zero, right? At this point, I mean, there are people who are economists in the legacy financial system, and they think for some reason, like Peter Zian, I'm sure you've seen the video where he said Bitcoin has another $17,000 to drop when it was at 16,000. What he was saying is that people will give you money to take their Bitcoin, and just that alone shows you how uninformed the majority of people are, right? Why would somebody pay you to take their Bitcoin? I mean, that doesn't really make any sense to me. I can see it going to zero, but negative, I mean, it just shows you this guy is uninformed. He doesn't know what he's talking about, and he has no interest in learning. So,
Yeah, it's frustrating when people are like that because to me it's frustrating when people like Peter Zion or others can be so right about certain things and they're wrong in many others, right? Peter Schiff is another great example, not to pick on the name Peter, but Peter Schiff I think is the most infamous example where he clearly understands the problem of fiat currency. He has some excellent videos, especially from the Great Financial Crisis, breaking down the problem really well. He did predict the housing bubble as well as a bunch of other recessions that didn't happen, but generally Peter Schiff has been right 10 times more than the legacy media and the legacy traditional finance people. But he drops the ball with Bitcoin, right? I think Peter Zion is another one of those examples where people listen to him because on many aspects he is very right. Zion is very correct about the population implosion problem, right? Our birth rates are pretty low. He's very accurate about many other things, right? And people would debate how accurate, but it's frustrating when people are correct about some things and they're totally wrong about Bitcoin. So why do you think that even in, there is a large circle of people that know nothing about money, right? That's most people, right? Within that circle, you have a smaller circle of people that do know a lot about money, right? That's pretty much everyone, the traditional finance, traditional retirement planning, CFA, whatever, CPA environment. But I would argue the large circle of there, even if they know a lot, they still don't understand Bitcoin, right? These are the people I think about, like, again, Peter Schiff. He's right about most things, dead wrong about Bitcoin. Peter Zihan, right about many things, wrong about Bitcoin. Dave Ramsey is another infamous example. Dave Ramsey is right about a lot of things, especially behavioral psychology with finance, wrong about Bitcoin. Grant Cardone, other people, are very right about various things, but are wrong about Bitcoin, right? Elon Musk even is one of those examples. Elon Musk is a genius and he's brilliant and he's done multiple things that nobody thought was possible and until he just did it. But he's been wrong about Bitcoin. And on a technical level, objectively, he has been at times laughably wrong, right? And granted, this was a few years ago now, and there's rumor that maybe he gets it more. I personally doubt that. But why do you think that even these people that are brilliant and geniuses that have way more money than us and way more intelligence than us still have trouble understanding, right? Warren Buffett, Charlie Munger, the list goes on. But why do you think, why do you think so many people get to the 99-yard line, but they fumble before they make the touchdown, right? But they get so close to figuring it out, but they miss that last 1% of, let's say, insight. Why do you think so many get so close and yet so far?
That's a great analogy, by the way, the get to the 99-yard line and then fumble on the 1 yard. I think the problem is that most people aren't willing to challenge their beliefs, right? At the end of the day, I made a post about this on Twitter yesterday. The US dollar is a religion, right? It's backed by faith, it's backed by trust, and there's a central authority. You can almost think of it as a god where they can do whatever they want, right? And they have power over everybody else, right? And they do whatever they can to retain that power. And I mean, if you think about it, all these very rich people, how did they get rich? They got rich by manipulating, but sorry, not manipulating, by using a system to their advantage that was intentionally designed to steal people's wealth, right? And if you think about it, what's his name? Elon Musk. He bought Twitter using his Tesla shares as collateral. So if you, so when you really wrap your head around that, it means that you don't have to sell your assets in the old system. It's you can just keep rehypothecating your assets forever, and nobody can stop you, right? And over time, this has made a big problem for the majority of people. Housing is one of those issues where you have baby boomers who own one house, they build their equity for 20, 30 years, and then they buy another house by borrowing against that first house. Then they buy another house by borrowing against that second house. Then they buy a third, then a fourth. I know people who own 30 houses, 40 houses. There's people on Twitter who own 30 or 40 houses, and they're barely making 100 grand. How does that make sense? That makes absolutely no sense, right? It's I know people are taking that risk, but the thing is that that risk could really blow up in their faces. And most people are happy to take that risk. They're happy to continue benefiting from that risk because it's worked from them for them in the past, right? It's always worked for them. Why would they change? Why would they try to move away from something that's worked for them? It, the thing about Bitcoin is that it really challenges your beliefs. It really makes you rethink everything you know about money, makes you really rethink everything you know about currency. It makes you rethink everything about the world, right? And most people just aren't ready for that yet. Most people aren't going to be ready for that for years. Most people aren't going to be ready for that until Bitcoin's $1 million, right? At that point, there will still be people saying, "Oh, it's going to zero," but eventually I think everybody will be forced to buy Bitcoin, right? I think that's the main takeaway here. It's a good thing that Elon Musk doesn't get it, right? It's a good thing that Warren Buffett doesn't get it because if they did, they'd own everything, right? Warren Buffett's company has something like $150 billion in cash, right? If he wanted to, he could just dump all of that into Bitcoin, own 3 to 5% of the supply, and take the price up to 100,000, 200,000, 300,000, $500,000, right? But they're not doing it because they don't get it. And to everybody who's early to Bitcoin, that's a good thing, right? If you're buying Bitcoin before these geniuses, if you're buying Bitcoin before Warren Buffett, you're ahead. If you're buying Bitcoin before Apple has it on its balance sheet, you're ahead. Same thing with Elon Musk. And it's a good thing in my opinion. It's a good thing that these people don't get it because the more these people get it, the fewer Bitcoins are available for everybody else, right? And everybody else is going to be struggling to accumulate 100,000 Satoshis at a point, right? Eventually that will happen. There's no way around that. Eventually 0.001 Bitcoin will be generational wealth. And who knows how long that'll take? Could take 60 years, could take 70 years, could take 20 years, who knows? But eventually it will be the case, right? And that at that point, the only reason why that would be the case is because there's not enough supply available to be bought at the current prices, right? And there's no way around it. Eventually, we're going to get to that point. I think there will be a point where people are celebrating 10,000 Satoshis, 5,000 Satoshis. We're going to probably be able to split Satoshis into further smaller units, right? Because that's the only way to transact. As more people understand this, fewer people want to sell it. As their wealth increases, let's say you go up 10 times in wealth every 4 years, let's say 10 times, 5 times, even 3 times. Eventually, you're going to have so much wealth that you won't have to sell your Bitcoin. right? People will gamble, people will make stupid moves, and they'll sell their Bitcoin early, but eventually all that Bitcoin, whoever has Bitcoin is going to probably keep the majority of it, right? Let's say if I have Bitcoin, I don't plan to sell it anytime soon. Uh, I'm building cash flow, right? I'm building businesses that have cash flow, so I don't have to sell my Bitcoin. There are a lot of people out there who are already doing that. I know people who are buying $10,000, $15,000 worth of Bitcoin a week, right? And it's just the way it is. Either you get in early and you get the distribution that you deserve, or you get in late and you get the distribution you deserve back at that point. So,
Yeah, you brought up a lot of really good points there. Later in this discussion, I'd really like to dive into those incredible claims you made about a 10,000, 100,000 stacking gold being significant in the future. I'd really like to dive into that more, go through some numbers, whether that's price predictions or division or whatever it is. But you talked about the real estate investors, you know. A lot of people watching this probably have heard the case against bonds. A lot of people have probably heard the case against dollars, but you specifically were talking about real estate investors, and I know that those are some of the people that you like to have a friendly debate with on Twitter and Instagram. So maybe let's dive into that a little bit. Um, let's say, okay, I'm a real estate investor. Lately, you talked about 30 houses. Let's say I'm the kind of guy that's got 30 houses you're talking to right now. Um, why would you say that it's going to end or it's going to collapse or whatever? Uh, if at the end of the day I get it, I get it, the dollar's broken, whatever. I'm borrowing dollars to buy the real estate and hold the real estate for the long term. The real estate is a business that cash flows to pay for the dollars I borrowed, and
mhm.
over time, the real estate will be worth more in nominal terms, and I'll have my profits that way. What would you say to someone um, like that? Maybe that person, maybe one of those people owns a bunch of Bitcoin. On the other person maybe owns no Bitcoin. What would you say to each of those people?
So I think I think it's important to look at why we need cash flow in the first place, right? The reason why we need cash flow is because people don't want to work. They don't want to spend their time being productive. So they want to buy these things, stocks, real estate. They want to buy dividend stocks. They want to buy cash flowing real estate because they want to be able to pay for their expenses rather than getting capital gains. So for example, I've spoken to so many people who are saying how um I don't want the 50% returns, the 50% annual returns from Bitcoin because I get 3% cash flow, right? When you think about it, when you really zoom out and you really think about how stupid that really sounds, it's a no-brainer, right? It makes no sense. The tax benefits are fake. You're getting returns because of inflation, and then your government is telling you, hey, you don't have to pay us as much taxes. You earned this, you risked all of your money, you risked your entire net worth to buy this thing. But now we're going to give you a tax break. You're going to have to pay us less taxes. You've already lost a ton of money to inflation, but that's okay. We'll give you a tax break so you don't have to think about it too much. And a lot of people will defend that, right? But when you bring tax breaks into a discussion about Bitcoin, I think I like to think of it this way. You're bringing a knife into a gunfight, right? Tax breaks are there because without tax breaks, real estate wouldn't be profitable. People wouldn't be buying real estate. The goal of governments is to concentrate wealth within their country. If that wealth can leave, they don't like it, right? So if somebody can buy tons of real estate and just have their money parked within that country, they'll keep paying property taxes, right? They'll keep paying taxes on their rental income. They'll keep paying taxes on whatever they have. Even with stocks, same thing. Stocks are locked up in that country and you can't take them out without permission from your bank, right? And
It's one of the reasons why there are heavy tax fees on withdrawing early from retirement accounts, right?
exactly. And I mean, they want you to lock in your money because if you don't lock in your money, then you're spending today and you're increasing inflation, right? When you connect all the dots, when you turn the data into information, I feel like it's impossible not to see where Bitcoin is going, right? I know a lot of people will say on Twitter, on Instagram, oh, I need my cash flow. I need my 5% returns every year. But the thing is that institutions don't care. They don't care, right? They don't care. All they want is higher returns. They want to make their investors happy. They don't care about cash flows. They would rather have those 50% returns because they're rational investors, right? They know what they're doing. They're the smart money. You would consider them the smart money. A lot of people who are in Bitcoin now, I would still consider them dumb money because a lot of them will sell, right? A lot of them will sell early. They'll sell if they see $100,000, they're gonna sell. If they see $200,000, they're gonna sell. People are gonna sell at $1 million because they think, okay, it's not going any higher, or they're thinking it's gonna drop and I'll buy back. But the thing is that when these institutional investors come in, they're not gonna sell. They're gonna hold forever. They're a new level of conviction once they understand what this is. Like if you think about it, do you think Michael Saylor is going to sell his Bitcoin? Probably never, right? He understands it. He understands it to a point where he doesn't have to sell. He can borrow against it if he wants to. Of course, there's a little bit more risk involved, but at the end of the day, fiat currencies will be devalued forever, right? The way that he does it, he has these 5-year loans where he's paying 0.1% interest, 0.5% interest, and that's just absolutely nuts because inflation is higher than the rate that he's paying. And if you really put all the dots together, right now real estate is propped up because of mortgages. Mortgage rates were really low over the last few years. They've only gone down since something like 1980, I think it was. They've only gone down, right? And if inflation doesn't slow down, rates can't come down. Rates have to keep going up. I know people are saying that, oh, the Fed is going to decrease rates, they're going to do it. But what if they don't? Right? What if they become that rational investor that doesn't lower rates because they don't give a shit about the market? All they care about is they're worried about securing their currency, the currency that they issue. They don't care about the US government. They don't care about some random person on Twitter with 30 properties. All they care about is protecting their currency and keeping the monopoly on money, right? But I think Bitcoin is so far gone. There's no way to reverse it at this point. it's it just has benefits over real estate at the end of the day. I actually have a list on here. I was working on something. There's quite a few things that real estate that Bitcoin gives you that real estate doesn't. For example, you can avoid interest, which I don't know if many people know this, but people who are Muslim, people who follow the Islamic faith, they can't borrow money. They can't pay interest. They can't receive interest. So to them, Bitcoin is a gift, right? To them, Bitcoin is just that pure commodity where they can own it and they don't have to borrow money to buy it, right? And to them, that's massive, right? Saudi Arabia has something like, I don't know what the number is exactly, but something like $500 billion. I don't know what, maybe I'm off by a couple of magnitude, but once they figure it out, they're going to be able to put all of that money into Bitcoin because it doesn't go against their religion, first of all. It is something that will keep appreciating the way that I mean, maybe not in the short term, but over the long term, it will have to because there's a limited supply. And of course, there's other benefits. So, for example, there's no maintenance and repairs. Why owning real estate is a second job? Why would you want to do that if you could own something else? I love this tweet. Somebody's posted this so many times. I think maybe you posted it a couple of times. Um, the people on Twitter, the idiots on Twitter who don't know anything about the markets own this thing. They're sitting on the sidelines. They don't even have to do anything, and they're outperforming the biggest hedge funds in the world, right? Why would you not want that asset? There's also no need for an inspector, no need to deal with tenants. There's no need to collect rent. I mean, with real estate, you don't really take possession of your property, right? You're giving it to somebody else, you're renting it to somebody else, and they have full power over that property. What if they burn it? What if they do something to it that you can't get an insurance claim on and they just disappear, right? There's so many benefits to Bitcoin over real estate, and most people just don't see it. There's no property taxes, there's no need to deal with realtors or lawyers. I actually used to work as a realtor, and people have told me that I don't understand real estate. I worked as a realtor, so I do understand real estate. Most people don't get that they don't need the cash flow. What they need is that store of value function. They don't care about the cash flow is irrelevant. You can easily sell tiny bits of Bitcoin if you want to, but most people are deluded to think that they need cash flow. unfortunately. And I think that's going to come to a pretty big crash at some point where there's so much property available. All these financial institutions, they sell their properties, all these hedge funds, they sell all their houses, all these single family homes that they own. And who's going to be left holding the bag? Retail investors.
That's pretty brutal.
It
Yeah.
is.
That, yeah. Yeah. For context too, I don't know if you know this, Rajat, but I was in real estate too. I was never a realtor, but I know a good bit about it. Um, and it's hard. Prices are high, rates are high, and it's kind of like a yin and yang. No matter what happens, there's going to be opportunities and there's going to be hardships, right? If interest rates fall a lot, oh yay, my monthly payment's cheaper. Yeah, but the house price goes up, right? Or if the house prices keep going up, then it's even more like, if rates fall, prices will go back up and it'll continue to be unaffordable. If prices fall and interest rates stay high, it'll get more affordable. But then, of course, prices are going down, and the current holders are in trouble, right? So, this battle between house prices and interest rates, right now it's not good because both prices and rates are really high. And I don't know. I look at it and seems like either way, someone's going to have pain, right? Either the new home buyers are going to have pain, or the boomers and the people already own the houses are going to have pain. It's like it it's not fun. I mean, either way, it seems like no matter what happens, someone's going to hurt, right? Whether prices fall, someone's going to get hurt. If prices rise, someone's going to get hurt. If interest rates fall, someone's going to get hurt. If interest rates rise, someone's going to get hurt, right? It feels like no matter what, um, people are going to be stuck in one form or another, and it all comes down to picking on which side of that equation are you going to be, and yeah, it's not as exciting as something like Bitcoin, where Bitcoin surviving does not depend on the dollar failing. Obviously we think the dollar will eventually fail, but Bitcoin does not need to um, succeed as a function of the dollar failing. Does that make sense? Um, yeah, it's
Yeah,
not fun.
I think that's something that a lot of people believe. They think that the Bitcoin needs US dollars to survive, but that's not true. Just because it's priced in it, that doesn't mean that it needs the US dollar, right? Everything is priced in it. Apples don't need the US dollar to be around, right? We're not going to need we're not going to need US dollars to grow apples. We're not going to need US dollars to sell apples. Same thing with Bitcoin. Bitcoin is its own commodity. It's its own product, right? Not even product, actually. Product is a very bad word. Bitcoin is not a product. It's its own commodity, right? It's its own asset. It's its own good that nobody can manipulate. Nobody can stop. The US dollar has nothing to do with it. If the US government keeps raising interest rates, it's very likely that Bitcoin will keep going up because all these real estate investors are going to realize my property value is going to disappear, right? So either way, Bitcoin survives. Bitcoin is the king. But again, for my own for my own the CFA Institute, I need to say, oh, there's a risk, but I don't truly see a risk. I think once you study it, maybe let me know what the risk is. Anybody in the audience, let me know what the risk is, and I'm ready to debate. So, yeah,
Yeah, well, all the main risks are the holder themselves. It's not with Bitcoin, right? Bitcoin, the asset, has very little risk. All the risk comes down to, are they self-custodying it, right? We'll get to that more later in the discussion. Um, I suppose to be devil's advocate for the real estate investors, they would say, well, yeah, you could say property prices are going to crash, but the government's just going to prop up everything, right? The government is propping up the bond market. They're not going to let the bond market crash in nominal terms. In real terms, they might, but they're not going to let the bond market crash in nominal terms. They're not going to let the stock. I mean, the American stock market in real terms has been flat for about 50 years, but in nominal terms, it's up what, 20x, 30x in the last 50 years or so. At least the S&P or Dow or the Russell 2000 or whatever. And the same thing with real estate, right? If you price real estate in terms of other things in the world, actually, it's not really risen in value for half a century, but in nominal terms, it skyrocketed. So, what would you say to someone like that? Yeah, it might crash in real terms, but in nominal terms, everything is just going to keep getting more expensive in dollars forever because the government is not going to allow, like you described, the government wants political currency within its jurisdiction. The government wants to be able to continue to have the capital gains on the stocks. They want to continue to have the property taxes on the properties. So why on earth would the government allow stocks and real estate and bonds to fall in nominal terms when they're relying on those tax receipts from those assets to cover the deficit and cover our expenses? What would you say to someone like that?
I like to look at it a different way. So the way that I look at it is global real estate is worth something like $400 trillion. Global stocks are worth something like $100 trillion, something like that. Bonds are worth $400 trillion. These are numbers that I found from other people's research. No, they're not my numbers. I haven't done the research. I've looked at the sources. I've confirmed with the sources, but other people have brought these up. But if you think about it, Bitcoin is worth $1.4 trillion, $1.3 trillion. What's more likely to double, real estate or Bitcoin? I think once you put it in that from that perspective, what's more likely to happen? Real estate's market cap goes from $400 trillion to $800 trillion, or Bitcoin's market cap goes from $1.3 trillion to $2.6 trillion. What's more likely?
I know my answer.
Right? I mean, I think it's easy
Right.
to once you get it, it's easy to give the answer. Once you understand what how markets work, once you understand how Bitcoin works, it's easy to give the answer. But most people don't see it that way. All most people see is
Yeah.
the dollar value. They see the not like you said, the nominal value. But the nominal value is irrelevant, right? Because if you have a super high nominal value, let's say your house goes to $500,000 from $200,000 to $500,000, but if your costs have doubled or tripled or quadrupled, is it really worth it? Because you still have to have a house to live in. It's not like you're going to sell your house and take those capital gains and buy your groceries with it, right? You're still going to need a place to live. Either you rent from someone else or you rent yourself, right? Oh, sorry, you rent from someone else or you own the property, right? And the nominal value again is irrelevant because the nominal value means absolutely nothing. If you can, if let's say houses were worth, this is from a chart that I saw in 1971. Houses were $25,000 and the average income was like $10,500, something like that. Houses were 2.3 or 2.4 times the price, the average annual income. Today, they're 10 times the average annual income, right? How many people are going to be able to afford the house? How many people are going to be able to buy a house? I feel like newer generations are starting to give up, right? They're living in their cars. If you look on Twitter, on Instagram, if you look at TikTok, there's a lot of people who are just complaining, they're crying, they're uh and who can blame them, right? Because house prices have tripled, quadrupled, 5x, 10x in the time that they can't even save for a down payment, right? So I live in Ontario. Apparently in Ontario, it takes at least 11 years to save for the down payment on a house. That's just the down payment. That's not even the house. That's the down payment, which is just crazy, right? Because in that time, what's going to happen to Bitcoin? There's going to be three halvings. Bitcoin's price could easily go up. I'm not going to give any numbers, but it could go up significantly. Who knows? Who knows how much it can go up by? But the thing is that you're so much better off owning Bitcoin because eventually you save in Bitcoin, you'll probably be able to buy that house outright instead of getting a mortgage, instead of having to make payments to the banking system for the rest of your life. Mortgage apparently in French means death pledge. And I have a mortgage.
Yeah.
Our rate is very low, but as soon as I have enough money to pay it off, I'm going to because I don't want to pay a mortgage forever. It's so stressful, right? It's so annoying to have to pay a bank $2,000 a month. I mean, I get it, they fronted the money, but I'd rather not have that mortgage anymore, right? If I have the money, I'm gonna pay it off. I'm gonna try as hard as I can to get rid of it. I think most people will do that, right? And the banking system will suffer. Bitcoiners are going to be able to buy houses for what? 1 Bitcoin, under 1 Bitcoin, half a Bitcoin, quarter Bitcoin, zero point 0.1. Eventually that's going to happen, right? These numbers are going to be there. Eventually houses will be 0.01 Bitcoin. I did the calculation. Um, if you calculate it, there's 144 million houses, there's 21 million Bitcoin. On average, a house in the US, 144 million houses in the US. A house in the US should cost point 1.014 Bitcoin. Was it 0.014 or 0.14? One of the two. But it's significantly less than 1 Bitcoin. And right now a house costs 7 Bitcoin. So you can either put that 7 Bitcoin into your house, or you can buy Bitcoin with it. And I mean, you can either
Yeah.
become insanely wealthy if your bet goes, not even bet, but if your decision goes the
Yeah.
way that you want it to, or you can own this house that depreciates in value, that you have to maintain, you have to pay for constantly, you have to pay property tax on it, you have to do all this stuff, and you're at a loss, right? I was doing another calculation where, and there's a lot of calculations that I like to do. If you buy a $500,000 house, or sorry, a $625,000 house, and the interest rate on your mortgage is 6%, the current rates, you're by the end of your mortgage in 30 years, you've paid the bank as much as the value of the house. So the house actually cost you $1.2 million. I know people are going to say, oh, it's the time value of money. The value of the house is going to go up. But you've given away the majority of your return. So did the house value really go up? People just see what they bought it for and what they sold it for. They don't calculate everything else. They don't calculate the property taxes. They don't calculate maintenance. They don't calculate their mortgage. And all that stuff adds up. So I don't even remember what the question was. I just went into this rabbit hole, but I think it's so important to just see where this is going. I think more people will see it. They'll have no choice but to see it, or they'll go down with the ship.
Yeah. Yeah. It's a brutal way to put it. I think that's a really good point you're saying about how the bank takes so much of the um, profit. Yeah, that's a really powerful statement. If we could get to some of those calculations, I did the exact numbers so that people listening can have something in context. So your claim is that there are 144 million houses in the United States of America. As we all know, there are 21 million Bitcoin. That means if you were to divide it evenly, there would be 14.5 million Satoshis, or 0.14 Bitcoin per
Hmm.
house in the United States. Now, I look at that, and intuitively, that just seems crazy. Like, wait, you're telling me that for 14 million sats, that can buy the average house, right? Now the average house in the United States, or the median house in the United States, is $400,000. So if we take $400,000, right, and we divide it by 0.145, that is a $2.8 million Bitcoin. That would be if Bitcoin were to appreciate to that today, that would be $2.8 million. But Rajat, as you were describing before, a lot of people don't understand how markets work, and don't understand that market cap is downstream of price, and price is set at the margins. So really,
Mm-hmm.
even this $2.8 million Bitcoin calculation, from what you're describing, even that is way too conservative. Perhaps by a factor of 10, we could be talking about a $28 million Bitcoin or whatever, just from what you're describing. So could you break down why that is the case, that really it's not so simple as taking the 144 million and the 21 million, and why it's actually way more um, it sounds absurd, but break us down why it's not nearly as absurd as it sounds.
It's the numbers are a lot higher than even what we're talking about here. Because the thing is that people who own Bitcoin don't want to get rid of it, right? They're going to do whatever they can to hold on to it as long as possible, right? And when they hold on to it, they're going to be waiting for a higher and higher price to be able to sell, right? And let's say let's say you own Bitcoin, let's say you own 1 Bitcoin and you're waiting for $1 million. And then on the way there, you study it and you understand that, okay, $1 million is low. It's going to go up forever. Why would I sell it at $1 million? What am I selling it for? Right? Um, I think at a point, people will understand that you need to convince the people holding it to sell it to you. You need to convince them that what I have is what you want. And if they don't want a house, they're not going to buy it for the price that the seller is offering them. And I think the one thing about Bitcoin is that you can hold off on a purchase of a house for a very, very long time if you want to, right? You don't have to buy a house. You can rent a property for the long term. You don't have to buy a house. So the people who are offering these houses to you, their prices are going to have to keep dropping, right? Because there's going to be more and more people who, keep in mind, there are people who own thousands of houses, right? There are people who own thousands of properties. They're all going to be selling. Because why would you own 1,000 properties? If anything, you can diversify, sell 100 of them, buy Bitcoin with it. And eventually, once that Bitcoin doubles, triples, quadruples in price, you're gonna be like, wow, why am I holding these stupid properties? Why am I holding these dumb 900 properties when I can just hold this Bitcoin and be perfectly fine? I don't need this. I don't need the cash flow. I could sell it all, get rid of it, own Bitcoin, build my family's wealth forever. This is my generational wealth. And that's going to happen, right? A lot of people who own those 1,000 properties, like Dave Ramsey, for example, Grant Cardone, Gary Cardone, his brother, all these people, they own thousands of properties, but they own them because they need a store of value. And they will realize that Bitcoin is the better store of value. And as more houses go on the market, fewer Bitcoin go on the market because of course Bitcoin is being more and more Bitcoin is being held by people who are gonna hold forever. They're never gonna sell. As more Bitcoin is taken off the market, fewer Bitcoin are available, more houses go on the market, you're gonna see the price inverse, right? Uh you're gonna see the price of housing continue to drop. At one point, a house cost 64,000 Bitcoin. Today it costs 7 Bitcoin. Eventually, it'll be 0.7 Bitcoin. It'll happen, right? And that can happen in one cycle. That could happen in 2 cycles, right? Eventually, it'll cost 0.07 Bitcoin. It's just the numbers will keep going up. But the thing is that house prices will go so much lower than we expect because houses are abundant. You can build more houses. Eventually, technology will make it so that, like 3D printed houses, 3D printed houses. I spoke with somebody um, who creates 3D printed houses. He has a business. Have you heard of Boxable by any chance?
Yes, I have. Actually, I've emailed their team. I'm trying to do a podcast with them, but as you can imagine,
Oh,
they get a lot of requests.
oh
So
yeah,
yeah,
of
actually,
course.
I'm very familiar
Yeah, yeah. So I
with
mean,
them.
if you think about it, these houses can be built in a factory by robots, and you just take them to the location of wherever you want to buy it. You buy some land in the middle of nowhere. You buy this house, $100,000, $200,000 in today's money. What will that be in 20, 30 years in Bitcoin? 0.0001 Bitcoin, 100,000 Satoshis, 10,000 Satoshis. Eventually the cost of producing a house will drop, right? It's artificially up right now. We don't so many people own so many houses that they don't need, right? And that's the main thing here. That's the main takeaway here. Once these people sell their houses, once they realize that I need to stop this bleeding, that's when things really change. I think that's when I think that'll happen starting when a house is 1 Bitcoin. Because I'm gonna be posting about it every single day, right? I'm gonna post it. I'm literally gonna post about it every single day because I want people to know. Because today people are saying no, doesn't matter what the price of a house goes down to. I'll keep my cash flow. But you're gonna feel stupid once the price of a house is at zero point 0.1 Bitcoin and you own 40 properties that today you can sell for maybe 100 Bitcoin, but in the future you'll be able to sell them for 1 Bitcoin, right? You just screwed yourself. You screwed your children. You by not doing the research, you hurt yourself, right? And even then, that's the thing. Even then, you'll be early.
Yeah, even then you'll be early because there are, if there's 2 million Bitcoin left on exchanges, there are at least 2 million real estate investors that have 10 houses, right? Because that's only 20 million houses, right? Like you said,
Yeah,
there's 140 million houses. I mean, that's like, I mean, it's just like even then, someone liquidating a 20 house portfolio to get 1 Bitcoin, even that is probably still early.
insane,
That's crazy. Yeah.
right?
And the other thing too, and not to I mean, I know you would probably say this too, and you were probably going to say it, so sorry for interrupting, but everything we've already been talking about, that's only America. Granted, America has a significant fraction of the world's wealth, but those 144 million houses, each of them probably going after, well, we know under 15 million sats, probably more like a couple million sats because the vast majority aren't on exchanges or being traded. Like that's only 5% of the world's population, America, right? And we're already talking about a million sats maybe being worth more than a house, which is 5% of
Yeah,
the world's population. And obviously, my hope is that Bitcoin and technological abundance and prosperity increases. so that the other 95% increasingly have abundant lifestyles and more energy, right? And so then that's where you start to get to what you were saying before about the 10,000 sat stacking goal, the 50,000 sat or the 5,000 sat stacking goal, where now all of a sudden, now you're 20xing the number of houses. That means just with houses alone, at minimum, or really at maximum, I should say, we're looking already at like 20 to 30,000 sats a house just by those two factors alone, by raining coins, chasing the houses, and we assume that everyone has a more prosperous future, right? Forget transportation, forget medicine, forget every other industry on the planet, just housing. Um, you know, it's incredible. It's ridiculous. And at times, frankly, most of the time, it's hard for me to really believe and internalize. But that's why I keep making these videos because, um, I think people need to understand that either Bitcoin doesn't work, in which case it's worthless, or if it works, like 20,000 sats is a couple bucks right now, like literally a few dollars.
Yeah.
I mean, that's how early we are in many ways. If this turns out to be what we think it is. So anyway, I don't know if you have anything else to add there, but it's really
It's
ridiculous.
$13. 20,000 sats is like $13 or $14 today, right?
Yeah,
And it's only gonna go up. It'll be $28 one day. It'll be $56 one day. It'll be $112 one day. It'll keep going up. And the people who are ignoring it are going to be angry and they're going to want to tax the Bitcoiners and they're going to want to redistribute our wealth. And that's just how it is, right? People who are ignoring it today are going to be, I think a lot of the people who are
yeah,
ignoring it today, they're a little bit arrogant. They think that they know everything. I'm saying that because I thought I knew everything. I thought Bitcoin was a scam, right? Up until 3 years ago, I thought it was, oh,
yeah,
this thing's going to zero. Who cares about it? It's nothing. I wish I'd started
yeah,
learning earlier, but the thing is that if I had, I probably wouldn't have appreciated as much, right? Um, I appreciate it a lot more because I spent the time understanding it, and most people haven't done that yet. So
yeah.
that's where we're gonna have to
Now,
go.
okay, yeah, okay. So I've got a couple questions for you. Now, one question obviously is that neither you and I'm sure, think that $14 worth of Bitcoin is going to be worth more than the average house anytime soon. I'm assuming we're talking many decades here. So I first like to ask you that. How long do you think this takes? And then the other question too is something you just said. You just said you think that people in the future are going to be jealous and envious of Bitcoiners, and the government's going to tax it to death, right? Now, my question is that if I'm trying to put myself in the future, which none of us really can, my assumption would be that people would get more angry about, let's go back to your example, real estate, $400 trillion asset class. I think people would have a greater uproar and anger if real estate doubled from 400 to 800 trillion versus Bitcoin going up a factor of 20. Because, like I was describing before, real estate, that inherently means it's more unaffordable for them, right? It's like if I'm a person that's angry, am I going to be more angry about the Bitcoiner that 20x is their wealth, but it doesn't impact me? Or the landlord who has the real estate that doubled and that does impact me because the house is less expensive? So I'd like to hear if you have any nuance there, because I actually think that people are going to be more upset with stock and housing prices going up than with Bitcoin prices going up. I think the more likely government intervention with taxing it is they claim it's an attack on the dollar, right? So maybe
Hmm.
maybe that would be the angle. But for both of those things, how long do you think we're talking? How many decades? Or maybe there's some worldview you have to, if then statement. And then also, what do you think about that dynamic I described with people perhaps not getting as angry as we think with Bitcoin and taxes versus, let's say, real estate and college? I think college education would be another one, perhaps even more so than real estate, that people get angry about. I don't know.
Hmm. I mean, it could happen. It could happen for all we know. It could happen in 30 years. It could happen in 10 years. It could happen in 5 years for all we know, right? It depends on how quickly the US dollar is printed, how quickly supply enters the economy. As more supply enters the economy, of course, as the US government continues to borrow more and more money. Right now, they're borrowing something like $1 trillion every 100 days. As more money enters the economy, a lot more of it will flow into Bitcoin, right? And there's
Yeah,
no way around that. It will happen. People are going to figure it out. And then over time, people will sell their houses. They'll sell their excess houses and they'll buy Bitcoin with it, right? They'll have to at a point. I think at a point it will make sense not to. And like I said, that could happen in 10 years. It could happen in 50 years. I don't know. I would be more uh I think to me it's probably going to be sooner rather than later, right? There's a guy on Twitter, the power law guy. Uh so I
Giovanni.
think yeah, him. I think his I think he's a smart guy and he knows what he's talking about, but I don't think he's actually said this. He doesn't consider the US dollar failing, right? He doesn't consider the bond market failing. He doesn't consider the entire world buying Bitcoin all at once. He doesn't consider the fact that one country could easily go on every single exchange in the world and buy every single coin under $100,000, right? They could do that overnight, right? Nobody's stopping anybody. Uh, put through a transaction, buy everything, it's all gone, right? Eventually, governments will be printing money to buy Bitcoin. So, like, I mean, it could happen a lot sooner than we think. For all we know, it could happen by the end of 2025, right? It all depends on how the FOMO works, how people really figure out what Bitcoin is, how quickly they figure it out. A lot of people are going to be on the sidelines. See, that's the thing. I think a lot of people who that's this is what I was saying. A lot of people who are retail investors are going to be bag holders. Stock market is going to decrease in terms of Bitcoin forever. Bitcoin, real estate is going to decrease in terms of Bitcoin forever. But I mean, who knows how long it'll take, right? It could take 10 years, it could take 20 years, it could take 30 years. I don't know. But if I were to predict it, I'd say it's going to be sooner rather than later. I would predict that it's going to happen within the next 10 years, over predicting it'll happen within the next 50 years. Because it doesn't really take that much money for Bitcoin to go 5x from here, right? Because 5x, I think there was something about the multiplier. You've posted about it. Other people on Twitter post about it constantly. Not my theory. I don't know what the multiplier is, but apparently Bank of America predicts something like 100 times. 100 times. Let me do the calculation here.
Yeah.
So
Yes, and for a little context here as you do that,
yeah,
this is a controversial topic. Bank of America back in 2021 said that the multiplier was as high as 118 during a bull market, meaning that for every dollar that was coming into Bitcoin, the market cap went up by a factor of 118, right? Again, this is market cap being downstream of price. However, I do want to say the caveat that clearly that's right now an exception of the rule. Right now, it's much more common that the market multiplier is much lower, like 3, 5, 6. That's a much more typical one. That's what we've been seeing with the ETFs. But there have been times, like in 2021, where it got as high as 118. And actually, in early January, late December 2023, early January 2024, it got as high as 228 on speculations of ETF approval. Now, again, that was just for a few minutes. The number is way lower, like 3 to 6 right now. But I don't know about you, Rajat, but I think that over time, the number is going to grow, right? So right now, maybe it's 3 to 6 on average. Maybe in a couple cycles, it's 8 to 10 on average, and maybe it's 20 on average, and maybe it's, like I think that number is only going to go up. And granted, that does work in the opposite direction too. That when people sell Bitcoin, the market cap goes down to a greater multiple. So of course, there's nuance, and a lot of people I think like to take your tweets and my tweets out of context and say we don't understand the nuance. But the reality is that you know it like something could still be directionally true. Like 118 multiplier is like, yes, obviously we understand that's not constantly what it is now, but it's still really important that if there was an event like you were just describing, Rajat, where the Saudis buy a couple $100 billion, I mean, obviously those are the scenarios where suddenly we're no longer talking about 118 or 228. We're talking about like 1,000 multiplier to one, right? It's those events where that multiplier really takes in. So anyway, sorry to ramble and cut you off, but did you get that calculation done yet?
I mean, if
I,
it's 118, then for every $1 billion that are put in, the market cap goes up by 118 billion, right? If
right,
it's $10 billion, the market cap goes up by 101.18 trillion dollars. So it doubles, right? $10
right,
billion dollars. For Elon Musk, that's nothing. For somebody extremely rich, that's nothing, right? Like I
right.
said, I think we were talking about this in the beginning where Warren Buffett has $150 billion set aside, right? Who knows? What if
Yeah,
he's studying Bitcoin? What if he's seeing that, oh, this thing is not going to zero? It just keeps going up, we need to get some access to this. We need to get some exposure to this. And what if they drop $1 billion overnight and it goes up $118 billion in market cap? But to them, $1 billion is very small. I mean, of course, it makes sense because they still think it's a gamble. But once they get it, they're not going to want to hold that
Yeah.
118 or $150 billion in cash. They're going to want to hold Bitcoin. And you never know when it could happen, right? It could happen overnight. It could happen 2 weeks from now. It could happen 2 months from now. For all we know, maybe BlackRock has a ton of paper Bitcoin and they're manipulating the market. So it goes sideways. It goes completely against people's expectations, right? People think, oh, by the end of 2024, we're going to see $100,000, $500,000, $300,000 Bitcoin. But for all we know, BlackRock could be creating paper Bitcoin. Coinbase could be helping them with that. And Bitcoin just goes sideways, right? It stays at the $60,000 to $70,000 level until the end of the year, until the end of next year, right? That's the
Yeah.
thing. BlackRock is, I think people say they're the third arm or the second arm of the government or something like that. And I mean, it makes sense, right? Because
Yeah.
they can literally control everything if they want to. But the thing is that you can't hold
Yeah.
another great analogy that I've heard from Bitcoiners. You can't hold a ball underwater forever, right?
Right.
You can't do that. Eventually, it will come and bite you in the ass, like it did with FTX, like it did with Celsius, like it did with BlockFi. All of these companies went down because they were selling paper Bitcoin, right? And that's probably
Right.
if BlackRock is doing that, it's going to happen to them too. They're not an exception. There's nobody who's too big to fail, right? That's one of the
Right.
special things about Bitcoin. Nobody is too big to fail. Everybody could fail at any point. There's no stopping this thing. There's no stopping this train. If you're going to stand in front of it, you're going to get
Yeah.
run over. So,
Right. To give an exact number of what you're describing, so Warren Buffett's got 150 billion. If the market multiple, let's say 10 to 1, so literally 10 times lower, 18 times lower than some of those higher multiples, but still higher than the multiples you're seeing currently. 10x is probably not that absurd. That's 1.5 trillion market cap, 21 million Bitcoin. That's $72,000 per Bitcoin. And literally yesterday, before the day before recording here, Nvidia stock moved by $200 billion in the course of 2 minutes, right? So, I mean, again, it's the same thing happening there, except in the stock world, not Bitcoin world, right? $200 billion, of course, did not move in Nvidia's stock in 2 minutes. It was a much smaller amount of capital was chasing it, right? And of course, I personally think Nvidia is a bit of a bubble, but it gets to the larger point that, the reason Nvidia is a bubble and Bitcoin's not is that Nvidia, is being priced based on cash flows, right? And Bitcoin it's not Bitcoin's intending to be money, not a stock. But anyway, to give an exact number what you're describing, that's what we could be looking at. I mean, that's crazy to think about.
yeah.
I know. So okay, I have a question. We might disagree on this, but I have a question. You've been talking a lot about how you think real estate's going to crash, these things are going to crash, and all that. And I'm curious if you're talking about in nominal terms or real terms, because when I look at everything we're talking about, I look at the Michael Saylor strategy. Basically, Michael Saylor's strategy is betting that in nominal terms, we're not going to crash. But in real terms, it is going to crash, right? Because basically what Michael Saylor's doing is he's borrowing massive amounts of nominal debt, right? Fixed rate, low interest rate debt in terms of dollars, and buying Bitcoin, right? And so my question to you is, when all these investors begin to do these things you're describing, whether that's the United States government or that's the small mom and pop landlord with 5 to 10 houses, um, or as other Michael Saylors or Warren Buffett's like we're talking about, right? Like, do you think perhaps that the crash in these assets, whether it's MicroStrategy stock against Bitcoin or real estate against Bitcoin or bonds against Bitcoin, do you think that crash is in nominal terms, or do you think that crash is in real terms, maybe against Bitcoin and a general CPI basket? And we just look at Bitcoin rising the fastest. Like, do you think we could see this scenario where basically the government puts a foot on the scale and says, yeah, we understand this is all going to crash, but we're going to keep nominally backing all these assets, and people borrow, convert into Bitcoin. Bitcoin basically just rips up. Do you think it could be something like that? Or do you think that the government is going to rug pull everything nominally crashes, and Bitcoin is the only thing left standing?
I think the US government is more worried about making sure that they can keep paying their debt and keep borrowing more and more, right? I don't think they're worried about investors. Uh, I think eventually they're going to have to decrease rates. The U.S. government, I mean, the U.S. people say, oh, the U.S. government and the Federal Reserve aren't related, but when you really think about it, of course they are, right? Why is the Federal Reserve buying U.S. government debt, right? It doesn't make any sense. But eventually, I think the Federal Reserve will start lowering rates. I think even if interest doesn't, sorry, even if inflation doesn't drop, even if inflation doesn't go down to 2%, eventually the Fed will start lowering rates because they know that they own something like, I think it's something like $7 trillion of, they own a ton of the US government debt. Um, and Social Security owns a ton of US government debt. So they know for a fact that if the US government defaults on its debt because the interest is too high, then they're putting themselves at risk, right? But then there's also the other side where something I was mentioning before, they want the value of the dollar to remain at the current levels, right? They don't want it to drop too much. So they're stuck between a they're stuck between a rock and what is it? A rock and a hard spot, something like that. That's what's happening with them,
Right.
right? They're stuck. What do they do? They're they're risk. I was actually writing something about this yesterday. They're in a position where either the US government defaults or the US dollar fails. And which one is worse for them? I think to them, because the US dollar is their commodity, I think they're going to get the US government to default, right? They want that power over money. Unless they truly understand Bitcoin, maybe what they'll do is they'll start buying Bitcoin. They'll start they'll start owning it and they'll do something with that. But I don't know what the more difficult place is there, right? I don't know what would be more difficult for them to do. I think it wouldn't make any sense for them to drop interest rates, but I mean, they just drop interest rates all the time, right? They don't really care about the price of houses. All they care about is that the US dollar survives and they keep getting their debt, right? They just want to keep getting their payments. So yeah, I mean,
Yeah.
if they're working together with the US government, they're going to collude, right? They're going to do something that benefits both of them somehow. So
Right. Yeah. I think that's such a hard question because, I think they would prefer kill the dollar than default if they can only kill the dollar a little bit, right? If they can get away with the dollar dying 10%, right? The dollar loses another 10% of value. Of course, they're going to prefer that over defaulting. But if they're going to flat out choose between dollar falling 99%, true hyperinflation stuff versus default, I think obviously they're going to choose default. But the hard thing is that, ultimately, I think the takeaway from this whole discussion for those listening is that just we don't know, right? Nobody knows, and there are people with a lot of money and a lot of brain power that don't know, right? I was having a conversation. I don't know if you know who Dave Foley is, Rajat, but for those who don't know, Dave Foley is a hedge fund guy. He's one of the core hedge fund guys, behind the Bitcoin Opportunity Fund with James Lavish. I was at his house 2 or 3 weeks ago, and I walked in. We said hi or pleasantries and sat down. And he had his Bloomberg terminal up, and on one screen, and Michael Saylor on the other screen, and we just talked for like an hour or two about just all the things that could happen. And he just kept emphasizing that him, hedge fund guy, his whole neighborhood in Boston, it's like all these traditional finance people, and he's just like, yeah, yeah, everyone's got no clue because ultimately, at the end of the day, we're trying to predict the actions of people. And even if Janet Yellen and Jerome Powell, even if there was a clear logical path, and I don't think there is, but even if there was, that doesn't mean they're going to take that. That doesn't mean they're logical, right? And so I think that's the takeaway for people watching this is that there isn't a clear cut path that they should do. And even if there was, they may not do it. And that's the beauty of Bitcoin is it takes it takes that power away from human beings, and that's why it's special. That's why it's important. So anyway, not to preach too much, but that's my thought there with all this stuff. But I think it's important to think about these things, um, because they do have an impact. These if-then statements. So
I
yeah,
completely
that's
agree.
what I
I
got.
think if you don't think about these things, then other people are going to be thinking about it and they're going to be ahead of you, right? Uh, I think Bitcoiners are
Right,
10 to 20 years ahead of just the average person at this point, right? If
right,
so one of the biggest disadvantages about Bitcoin, not even disadvantage, but one of the biggest things holding people back is that it takes a really long time to understand it, right? Most people won't understand it until they won't try to put in the work to understand it until it hits six figures, seven figures. And then it'll take them 2, 3 years to really understand what it is. And by the time it takes them that 2, 3 years, I mean, who knows how much better the education will get. Maybe people are going to be educating better than we are today, right? But eventually, all these people, they're going to want to own Bitcoin. Let's say even 2, 3 years from now, they're going to want to own Bitcoin. And there is going to be a point in the future where there's not enough supply to meet demand, and price is going to have to rise, right? Price, there's no way around that. And I've been trying to help because so the content that I posted before was mainly just it was mainly me talking about, let's say, traditional assets, real estate, stocks, personal finance. I think what I did was when I started posting about Bitcoin, I really shocked a lot of people. Something like 15,000 people unfollowed me, and that's perfectly fine, right? It's crazy, right? When you think about it, it's absolutely insane because this thing is outperformed.
That's like a quarter. That's like 1 in 4, something
Uh,
like that. 1 in 4, 1 in 5.
that was on Instagram, but the thing is that I was also gaining
Oh,
followers,
Instagram.
right? At the same time, people were
Right.
people were coming in. That's like 15% of my following, right? But people were also joining. They were also following me. But the thing is that if people are so convinced that this thing is a scam, they're not going to learn about it until it's $100,000. They're not going to learn about it until it's $500,000. They're not going to learn about it until they're getting paid in Bitcoin. And then by then, they're not even able to learn about it. They're just going to be forced to use it, right? And most people are on that track. I think something like 95% of people have no idea what Bitcoin is. They don't care about it. They don't own any of it. Even a lot of the people who own it have no clue what it is, right? When you really think about it, there's people out there who own Bitcoin and they're arguing with me saying, hey, this thing is going to zero. Why are you posting about it? This thing is a scam. It's a Ponzi scheme. I own some, but it's a Ponzi scheme. They own some, but I mean, that's the thing, right? They're not gonna, they don't understand it. They're never gonna understand it because they're not gonna put in the work, right? They've gone to the shitcoin path and they've gone to start owning all these crappy coins, whatever they are. I'm not gonna name any specific ones, but 99.9% of those coins are gonna fail, right? And there's nothing that we can do to stop that. There will be more shit coins. There will be more scams. I've noticed in my posts, in my comments, there's a new coin every single day, and it's so obvious that it's bullshit. But people are following these accounts, and they're getting their money stolen from them. Most people just have to learn by losing, right? Most people have to learn by getting their wealth taken from them.
Yeah, and that transitions us well to another point that you and I both care a lot about because here's the thing. Most people watching this are pretty bullish on Bitcoin already. Like, let's just be honest, most people watching this are not new to Bitcoin. And if you're new, welcome. But most people watching this, Rajat, frankly, they're pretty bullish on Bitcoin. And I think people's biggest problem is that they're not bullish enough, right? Maybe they have, let's say, one Bitcoin, $70,000. I think most people are emotionally prepared for it to double, right? I do not think most people are emotionally prepared for it to double in 6 weeks. And I especially don't think people are emotionally or financially prepared for it to go by a factor of 10 in a couple of years or a factor of 100 in the course of even a decade, right? Even if
Mhm.
Bitcoin goes up by a factor of 100 from 70,000 to 7 million over the course of 10 years, even if it takes that long, that's still really fast. And so,
Mhm.
to your point that you just said about people's biggest risk of Bitcoin is that they lose it or have it stolen from them, um, what are you and I doing? I think people may know where I'm going with this. What are we doing to help people prepare against that dramatic and violent upside?
So both of us work with the Bitcoin advisor. We're both helping people to onboard with the company. Basically, what they do is they provide you with something called collaborative custody. Um, I know a lot of people they want to just hold their own keys, but not everybody is willing or able to do that, right? And they just leave their Bitcoin on an ETF. They leave it on an exchange. I think that's one of the worst decisions that you can make, right? And I know a lot of people who I actually spoke with a guy who had 100 Bitcoin and it was all on a ledger in his house. That's at the time it was something like $4.5 million. He had it on a ledger in his house, right? And he was an older guy. He wanted to pass it on to his kids. And he was worried that what if somebody breaks into my house and takes my Bitcoin? Or what if I lose my private keys? Or what if my house burns down and I just have this one copy of this of these keys, and what if I lose them? Right? I
Right.
think they have that fear, but there's a solution to it, and it's called collaborative custody.
Yeah,
If you want to
I'd
explain
agree with
that.
that. Yeah, we could talk about that. But and this is one of the hard things because I've been talking about this for over a year now, a year and a half now. And it's funny, a year and a half ago, people were actually really negative against this. Luke, why are you talking about this? Whatever, we get passionate about it, whatever. But I don't think, now a year and a half later, the conversation has really shifted. People are still, mixed reaction on it. But they're like, yeah, I've been thinking about, because they've been putting it off. But that story you just shared, I've seen way too many examples like that with people that have, let's say, $50,000, $500,000, $5 million, whatever, on Bitcoin in subpar solutions, right? So the ETF and exchange is obviously most frequent because most people just don't have self custody, and to add, people call me a fear monger. I don't know if they call you one, for hating on the ETF, but I want to clarify for those listening. Neither Rajat and I are being hyperbolic when we're talking about the ETF rehypothecating. Okay, I actually don't think they are right now, but it is a verified fact that BlackRock and they are, and assumably all the other exchanges using Coinbase, all of them, settle with Coinbase directly, and they don't necessarily have everything be on chain stuff because they're trying to avoid transaction fees. Okay, like, people are not ready for the scenario that, what if Bitcoin tripled on the course of 90 days and the US government gives people the dollar rate for their Bitcoin and says, sorry, we had to liquidate your Bitcoin ETF, here's dollars back. But that's going to be terrifying for me. Like, I don't look forward to that. I don't know about you, Rajab, but I really don't, because I mean, what's going to happen is that all these people that have the ETF are going to call us fear mongers, and then that's going to happen, and everyone's going to realize, crap, I had $300,000 of Bitcoin ETF. They just, they gave me $1 to $1 conversion, but Bitcoin's up 8% today. Well, shoot, I just lost 8% of my stack. Again, this gets into that nominal versus real terms purchasing power, right? Nominal, maybe nothing quote unquote crashes, everything keeps rising, but in real terms, it's falling, right? It's like, oh, well, government converted me 1 to 1 with my ETF. They didn't steal from me. But wait, Bitcoin's up 8% today. Oh, wait, next day it's up another 5%. Then it's up another 3%. Then it's up another 10%, right? I mean, it's like, that's going to be terrifying. People are going to realize, oh, crap, if I don't figure the self custody stuff now, I'm going to lose a third of my ETF purchasing power. And now what do I do? Do I wait for Bitcoin to come back down? It's up 30% in the last 5 days on this ETF quote unquote rug pull fear. I mean, it's like, I don't think this is nearly as crazy as people think. I mean, we saw this with plenty of other exchanges. We've seen this plenty of other times in American history. I think there's, anyway, I'm going on a rant now, but I don't know about you, but it's really tiring that people don't seem to understand the risk here. That when they own the ETF, they don't understand that all it takes is one, insolvency at Coinbase. That they are one Coinbase mistake away from getting wrecked, or they're one government executive order away from getting wrecked, right? And even if they get back 80% of their Bitcoin, like, that's 20% of their stack. Even if they get back 2/3 of their Bitcoin or half their Bitcoin, it's like, that's a really expensive mistake. And unfortunately, I think as Bitcoin gets more valuable and it becomes an increasingly important nationally strategic asset, I mean, I think that's the risk people pay. Nothing in life is free, right? And I think that is the risk people are paying if they're dealing with counterparty risk. So anyway, that's my rant about that. But yeah,
I agree with what you're saying. I like even those 8%, 5% numbers every day. I think if that happens, if the US government confiscates everything, they have another executive order, they take everything from people and they're like, oh, we need this Bitcoin to pay for our interest, or we need to pay for our debts. Um, those people aren't going to just sit on the sidelines, right? They've experienced what Bitcoin is. They've experienced the returns. I think those 5 to 8% returns are going to come because people are going to be converting that cash they got into Bitcoin, right?
Right.
And as uh as as more people, I mean, at that point, it'll be very likely that what ETFs will have 1 million Bitcoin, maybe 2 million Bitcoin,
Yeah.
maybe more,
Right.
right? And they're just taking that supply off the market. And if the same
Yeah.
people say, "Hey, I have 500 grand, I'm gonna go and buy as much Bitcoin with this as I can because this $500,000 is sitting in my bank account. I know what it is now. I understand what Bitcoin is. I'm gonna go buy some. I'm gonna put it in self custody.
Right.
Eventually, it will go up 100 times, 200 times, 300 times. I'm not even saying 100%, 200 times because there's so little available, right? And everything that's held by the government, everything that's held by BlackRock, that's never going to go back to the market. They're not going to sell it,
Yeah.
right? They're gonna
Yeah.
redistribute it between their own funds, right?
Right.
And you're never going to be able to get that Bitcoin back.
See, here's the interesting thing, though. I'd like to run this by you and see what you think about this. This is something I've been thinking about a lot recently. A lot of people assume, oh, Luke Broyles, Rajat, Sonny, they're talking about hyperinflation. They're talking about the American default. That's the end of the world, right? Oh, they're fear mongers, but or they're panic spreaders, right? Or ETF that would never be confiscated, right? But here's the thing: it's like, what if? Here's a question: what if the path of least resistance and least pain is what we're talking about? Because if I think I'm the U.S. government, I have way too much debt. I risk either defaulting the US government or we destroy the US dollar. What if I don't have to do either of those? What if I can avoid hyperinflating and collapsing the dollar? And what if I can avoid the national debt imploding to where we default? What if I can avoid that by one executive order and we get 500,000 Bitcoin or we get the million Bitcoin and we mark up the price to make ourselves solvent, right? Because really what we have is a debt to equity problem. We have not enough equity, too much debt. Okay, we don't have to collapse the dollar now, hyperinflation and the dollar. We don't have to even default. Both of those are horrible scenarios, but we have this third scenario where we just 6102 it, take the Bitcoin, mark it up over the course of the next 120 days. Great. Now our debt to equity problem is maybe not solved, but at least delayed another 20 years, right? It's like, what if the government taking the ETF Bitcoin is not as a result of some hyperinflationary collapse of the dollar or the economy? And what if it's not even a government default, which maybe they'll prefer that? But what if it's just averting those other two options? Like, I don't think maybe that doesn't happen, but I think if I was the government, that's what I would do. I know that. And because either I'm going to print $1 trillion to buy Bitcoin spot, or I just print $1 trillion, dump it onto the ETF holders and force them to buy spot. And then I'm covered. Because this is literally what the United States did with gold in 1933, right? We took the gold from people, gave them 1 to 1, and then we quadrupled the price of gold to make ourselves solvent, so we didn't have to destroy the dollar or default, right? So anyway, what do you think about that?
I wouldn't be surprised. I think that's probably the way to go, right? I mean, for them, if they want to do it,
Yeah,
that's the way to go,
is
right?
that what you
Because
would do?
I didn't even think of that, man. That's a really good insight. I feel like that would be the way to go. Right now that I think about it, why would they destroy their debt? Why would they destroy their reputation with the entire world? Why would they destroy their dollar? It benefits them,
Yeah.
right? It benefits both the Federal Reserve and the US government to just take the Bitcoin, right? Because that Bitcoin is going to be worth at that time. Right now, what are the ETF? How much Bitcoin do the ETFs have?
About
850,000?
550. Um, no, I think it's less. I think it's more like 600,000. I don't know.
I think
Let's say it's a
including
million. Let's say it's a
GPPs,
million Bitcoin.
1 million Bitcoin. Okay, so 1 million Bitcoin. How much do you think price will be at that point? At 1 million? I was actually
Oh
thinking
man,
Bitcoin could hit a
yeah,
million dollars before they accumulate 1 million Bitcoin. I don't know.
really?
I mean,
Wow, you're
maybe I'm wrong
bullish.
because I could
Yeah,
be wrong because keep in mind that this is just the American ETFs. There's also Hong Kong.
right.
There's also all the other ETFs that are around the world. So as they see the ETFs accumulating in the US, they're gonna want to have their own product, right? Because they can all do their own 6102. That's what they want. They don't want you to have Bitcoin for yourself. To them, it's more about having people priced out, right? If
Right.
they can raise the price of Bitcoin to $1 million and they can stop people from owning a whole Bitcoin, right now it's too easy to own a whole Bitcoin, right? For a lot of people, for a lot of people in the West, it's very easy to own a whole Bitcoin because they have billions of dollars sitting there, right? I mean, they don't want people. I mean, I keep saying they, I should say banks don't want people to leave.
Yeah.
The US government doesn't want people to leave because when people go to Bitcoin, there's no longer any way to track them,
Right.
right? And that's probably, I would say that's what they want to avoid, right? If they're really smart, if it was me, that's what I would want, right? I'd want to raise the price.
Right.
I wouldn't be manipulating it downward. I would be manipulating upwards because when it's going down, when the price is dropping, more people have access, right? Think about it. How many people on Twitter are saying, I want to buy at 40,000, 30,000, 20,000, 10,000? Why would they bring it to those prices? And
Right.
to do that, they'd have to dump Bitcoin on the market. So they're taking a risk of never being able to get back the same amount. So to them, it makes no sense to want to drop the price. To them, it's more about increasing the price, get people to FOMO in 6102.
Yeah. Yeah. I mean, again, we're just predicting human action, but to me, that just makes so much sense. Is raise house prices, stock prices, and bond prices enough for the market to stay stagnant, but not too much that people riot or rebel. And with Bitcoin, just keep forcing price up because when you manipulate Bitcoin price up, you're not disenfranchising people from buying a house, right? With real estate, you got to do that, right? So you got to raise prices, but not too much. With Bitcoin, you can just
Yeah.
keep raising, 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 raising. And like you just described, why would they price down? Like maybe they do it for a short term, but in the long term, why manipulate price down where you don't have full control over that? But you can just print currency faster than people are able to stack by selling their houses, by selling their real estate, by selling whatever. Like, I mean, it's crazy, but I think Bitcoiners are so used to being on the short end of the stick and being having the FUD, having the negativity against them. I think we're so used to assuming, oh, the government's going to do everything it can to suppress price. But like, what if the attack is not them suppressing price? What if the attack is them just making it go vertical without hyperinflation? Like that's another
Yeah.
thought is that what if we don't have hyperinflation? Because when currency is printed, it's not distributed evenly, right? It doesn't go to everything equally. It goes to assets like housing and stocks more than CPI. What if we have hyperinflation, but all that printed currency just goes straight to Bitcoin and bypasses CPI and housing? Maybe housing triples and CPI doubles over the course of a few years, but then Bitcoin goes up by a factor of 1,000. Like, what if we have that,
Yeah.
where all this liquidity just goes in one spot? I mean, that would not be ideal for everyone, but it seems like that's much more preferable than, anyway, it's, yeah, it's crazy.
You can just honestly, you could keep going down this rabbit hole. You can keep imagining different scenarios, but I think the next 10
Yeah.
years are going to be amazing for Bitcoiners, right? I think that's the I think that's not something that anybody can argue against because the first 15 years Bitcoin went up to 70,000, 73,000, or something. Even I mean, if you think about it, compounding, that's just how compounding works, right? It took me on Twitter, it took me what, 6 months to get to 500 followers, and now there are days where I get 500 followers, right? Same thing with Instagram. Took me a year or maybe 6 months to get to 500 followers. Now I can gain 500 followers in a day, right? But that's how it's going to work with Bitcoin, right? It took Bitcoin 15 years to get to 70,000. In 10 years, who knows? What if Bitcoin is gaining $70,000 a day, right? Nobody can stop that. And see, there was actually something that I wanted to show you here. Uh,
I mean,
Let me know if you
that's a
notice anything.
1% move at a $70
Yeah,
million Bitcoin. It's a 1% move.
yeah.
Crazy.
Let me show you
Yeah.
something here. 1 second. I'm
Yeah,
gonna
go
show
for it.
you Bitcoin to
Show the
Naira.
people a chart. People like
I will.
charts.
I will. 1 second here.
Comment down below if you
Uh,
like charts.
let's see here. Okay, so I'm gonna share my screen. This one. Okay, so this is the US dollar to no, sorry, this is Bitcoin to Naira. We go to max.
Yeah.
So check out these numbers. This is actually crazy. So
Can you zoom in a
15
little
years
bit to the
ago,
chart?
oh, zoom in, yeah, yeah. So
Great.
check out this number. So if we look at the Naira price in on November 20th,
2015.
2015, Look at that price, 64,000.
Yeah.
And now Bitcoin is almost $100 million.
97 million.
And it took 8, 9 years, right?
Yeah.
And what's happening to the US dollar right now? Oh, my backpacks. Okay. So the US dollar right now is at $67,000. What are the chances that it follows the same path, hits $100 million in 9 years? Because the US dollar is, at the end of the day, printed at will. You can print it however you want to, as quickly as you want, as slowly as you want. The US government has an arbitrage opportunity. They can print as much as they want to, and they can pay us for our finite labor. Why wouldn't they? They're getting free money. They're getting free labor out of it. The banking system is getting free labor out of it because they can literally just print their money, right? And if you look at the charts, I mean, it's the same thing, right? Who would have predicted in 2015, November 20th, 2015, who would have predicted that Bitcoin will be up to $67,540
Within 10 years.
within 10 years, within 9 years, not even 10, 9 years?
Yeah.
Who would have predicted? Nobody would have predicted that. It's not even 10, it's like 8.5. Because November 20th,
Yeah.
2015, all the way to May 23rd, 2024, 8.5 years, right? Who can predict that? Who can predict what Bitcoin's price will be in another 8.5 years? Like the
Yeah.
chart, if you just look at the chart, man, like this is what surprises me. People don't see this. They think, oh yeah, the Nigerian naira is just a shit coin, but the U.S. dollar compared to Bitcoin is also a shit coin, right? And if you really look at this, it went from 64,000. It was pretty much moving. Actually, it wasn't moving sideways, but it didn't move up too much
Yeah. That's
until
500%.
yeah, it moved up 10,000% by December 15th, 2017. 10,000% means it went up what 100x,
Yeah.
107x, something
Yeah.
like that.
Basically.
So if Bitcoin goes, I mean, who can stop Bitcoin from going up 107x in the next 2 years, right? So
Right.
let's see what that would be. 67,000 times
107x, that'd be like 7
107,
million, 6.5 million.
7,226,000,
Yeah.
right? Who can
Crazy.
who can predict that? People can't even stomach 100,000. People can't even stomach 50. They can't even stomach 80,000 at this point because they're
Yeah.
so set on
It's too
buying at
expensive. Yeah.
40,000, right? Yeah.
Right. Right.
But then there's this
Yeah.
guy, I'm sure you know him, Stan or Ajinka, I think his name is, on Twitter. He was actually telling me how he started buying it around this point right here
Yeah.
at
Mid
around 3 million.
2020.
And to him, he was thinking, oh man, this thing is so expensive. But he was telling his family, buy it, look into this, understand this, put in the time. His family told him, no, we're not buying this. It's speculative. It's a Ponzi scheme. It's a scam. It's all this and all that. It has no intrinsic value, all that stuff that people hear. He was getting
Yeah. And now
that from his family, and now it's worth, look at that. It's worth almost
33 times more.
100x, right? 33 times
Yeah.
more from where he bought it. And he thought it was expensive. But that's the thing. You'll never feel like Bitcoin is cheap when you're buying it. You'll always feel like it's
Right.
expensive. Like when I was buying at 50,000, I thought, oh man, because it dropped to 40. I bought some at 49,000. I have just a regular buy whenever I have extra cash, I buy some, right? I bought some at 49,000 after the ETFs launched, and it dropped back down to 39,000. I bought more. But the thing is that I felt stupid for buying at 49,000 because now I can buy at
Yeah.
37,000, 38,000. But then now, I mean, at this point, that 47,000, people are waiting for it when it
Right.
was available. It was widely available. Anybody could have bought at that point, right? But they didn't want to. Where were you when Bitcoin was at 42K? Where were you when Bitcoin was at 10K? You were on the sidelines.
Right.
You weren't paying attention. You were thinking it'll go to zero. So you missed out.
Right. Yeah. Really good point. Yeah, you could take us off full screen if you want. But
Yeah.
yeah, so as we wrap up, people are pretty familiar. Hopefully they're familiar with the risks of the ETF and exchange. Hopefully made that point abundantly clear. Um, I do think we follow the 4-year halving cycle. I do think maybe we have flat or diminishing returns, um, because it's harder to get more and more capital, right? Until the moment these things we're talking about happens. Because I mean, when that happens, it's like the only difference between Michael Saylor's doing it and what we're talking about with the government is that the government has unlimited money. Michael Saylor's rich, but he's got 5 billion, right? I mean, the United States is adding 5 billion to our funded liabilities every 2.5 hours, right? So, I mean, that's like another Michael Saylor, you know, 4 times in a working day, right?
Crazy.
Anyway, so yeah, so hopefully people understand the risks with exchanges and ETFs. But let's get back to the cloud custody fact. Most people right now are comfortable with their self custody setup because their Bitcoin, frankly, is not worth enough for them to be uncomfortable with it. However, as we've seen in the last year or so, I've had a lot of these calls. People at first were like, "Oh, Luke, I don't need collateral custody. I don't need that. I'm good with my single sig. I got it memorized. I got it in my security deposit box." But now that Bitcoin's worth 4 times more than it was when I first started talking about this, now they're like, maybe I should have a third in this kind of setup to where it's safe, right? So for a lot of people watching this, they may not they may only have one custody setup for the Bitcoin, which to me is very concerning. Or they may not own any Bitcoin in their IRA or their retirement accounts, right? I think that's a huge mistake because Bitcoin could be compounding, nominally tax free, right? If Bitcoin does a 33x in the next few years and they have zero Bitcoin in the Roth IRA, I mean, yeah, they can complain that, oh, I don't want to set up my IRA because it costs a couple $100 to set up, but it's like, you know, it, you're saving all that tax. So anyway, um, I'm kind of answering the question myself, but what is your pitch to people to consider collateral custody and specifically collateral custody multi-sig with genuine zero single point affiliate? Why should people consider this? Maybe not necessarily for their entire stack, but at least for 5%, 15%, maybe 20, 30, whatever percentage they want. For some people, it's 80%. For other people, it's 5%. But what's your pitch to them of why they should click the link in the description below and book a call at Bitcoin Advisor? You're muted.
I think it's the single point of failure. The If your house burns down, you lose everything. If you hit your head, you lose everything. If you forget where your Bitcoin is, you lose everything. If you forget where your private keys are, you lose everything, right? There's that single point of failure issue where most people haven't taken that into account, right? They also don't know whether or not I've spoken to multiple people whose spouses have no idea how to recover their Bitcoin. I'm in that situation, right? My wife doesn't know how to recover my Bitcoin. I mean, she's learning, she's putting in the time, but at this point, if something were to happen to me tomorrow, she may have a lot of trouble, right? She may have a lot of trouble recovering it. And once you once you know that you're saving for your family's future, you want to make sure that that Bitcoin lasts, right? You want to make sure that that Bitcoin outlasts you. And the only way to really do that is you can either, I guess you can lock it up for a certain number of blocks, but I don't know if
Like a
that's the
time
best way
block?
to do it. Yeah, I don't know if that's the right way to do it.
Yeah.
Because you could easily lose your private keys. You could do something wrong there. You could lock it up for 400 years instead of 40 years or instead of 30 years.
Right.
And I know people who have done that. I know a guy who meant to lock it up for 4 years, and instead he locked his Bitcoin up for 40 years,
I've
which
met people like that. Yeah.
unfortunate. But I mean, and in 40 years, he's gonna be insanely wealthy, which is great. So
Yeah.
there's that, but he has to
Yeah.
figure out how to get his wife that Bitcoin, right? He has to get that Bitcoin to so collaborative custody. Uh, I like to explain collaborative custody as, do you know how safety deposit boxes at banks work?
Yeah.
Yeah,
Well,
so you have two
I do.
keys.
Yeah. Most people watching probably do too, but yeah, go ahead.
Yeah. So you have those two keys where if either one of them isn't present, you can't get into the vault, right? So somebody created something like that with Bitcoin called multi-sig. So what you can do is if you have a single sig wallet, you can have one wallet, one key. Whoever has that key can access the Bitcoin. If you have multi-sig, you have multiple keys. So you need, let's say, 2 out of 3 keys to actually access your Bitcoin. The thing is that either way, you have a single point of failure, right? So if let's say you lose both your keys and the multi-sig setup, let's say you hold 2 keys and let's say Unchained Capital holds one. If you lose your 2 keys, your Bitcoin is gone, right? If you have a single sig setup, you lose one key, your Bitcoin is gone. The thing is that the Bitcoin advisor is offering a service where they hold one of your keys. They can't move your Bitcoin. They're completely separate from Unchained Capital or whoever you go with. Um, but the good thing is that if they have one of your keys, you literally can't lose your Bitcoin because it's a very low chance that both Unchained Capital and the Bitcoin advisor will go bankrupt because they hold one of your keys. Each of them hold one of your keys. It's very, very unlikely for them to collude, right? Because the Bitcoin advisor will have to log into your account. They'd have to get into your private, sorry, your what's it called? Your two-factor authentication. They'd have to log into your
Yeah.
account. They'd have to get into your email. They'd have to do all that stuff. So it's very, very, it's nearly impossible to collude. I think it is impossible to collude. But what this
Yeah.
does,
Well, it isn't as it's technically impossible for Bitcoin advisors to collude and take client funds unless we could convince clients to sign off on transactions because we don't have authority to initiate transactions when clients do. So I mean, technically the collusion could happen, but that would require every single client being fooled into signing a transaction that is initiated by the other key agents, which obviously, clients are educated to not do that, right? Only clients initiate. But I mean, it's all probabilities, right? It's like it's way, if I was the guy with $5 million of Bitcoin, like, I mean, gosh, I would want at least half of it in this because it's like I'm like a sitting duck. I've told everyone I own Bitcoin. Like that guy probably has. He probably has employees. He probably has a business. I mean, his family probably knows. He has employees that probably know. I mean, it's like a ticking. Anyway, it's like a ticking time bomb. But yeah, anyway, um, yeah, I'm obviously I fully agree with you. But I'm sorry. Go ahead.
no, it's okay. Yeah, but I mean I think that's the benefit here, right? You get these, you get this organization who knows what they're doing to hold a key for you. They can't even access your Bitcoin, which is on its own great. Um, but they've done the due diligence. We've done the due diligence. We work with them, right? We're in a chat with them, and we're constantly seeing how these people are updating each other on this or that. We're posting our own thoughts. We know things before the general public does, right? So what we're doing is we're in general working as hard as we can to keep people's Bitcoin safe. We want to make sure people's Bitcoins it isn't lost by offering this collaborative custody service where uh the Bitcoin advisor holds one key, you hold one key, and Unchained Capital or whoever you go with holds one key. And I
Yeah.
think it's the only
Any
solution that,
organization. Mhm. Yeah.
yeah, exactly. It's the only solution where there's no single point of failure,
Right.
right? And
That,
I mean,
that's. Sorry, I think there's a bit
no,
of
no,
a
no
lag.
worries.
We keep interrupting each. Yeah, the only thing I was going to say was that yeah, the single point of failure point is really important. A lot of people I don't think understand that just because they have a multi-sig vault does not mean they've achieved zero single points of failure. They could have a self-directed vault, but if they own all three keys from an inheritance perspective, from a legal perspective, and if they ever want to borrow or lend their Bitcoin from that perspective, like it's literally no better than a single sig, right? If someone in the future wants to borrow dollars against their Bitcoin or lend out the Bitcoin to someone else wanting to borrow dollars, they are probably not going to be able to do it on their own. Who's going to accept that with a single sig or self-directed multi-sig? In fact, they won't even be able to do it with Unchained alone. They're going to have a vault with three different keys with three different key agents, right? I think there's a huge, Bitcoiners are extremely technical, but I don't think Bitcoiners are quite there yet, understanding like what's going to be accepted. When this hits the fan and when this starts going, is that there are a bunch of ways to do a multi-sig vault on a technical level, but really there's only one way to do it, where you have genuine zero single point of failure, including the person, right? You could have vaults where there's zero single point of failure, where you have no single point of failure besides yourself. But if you're still a single point of failure, um, in my view, you're not actually solving the problem. You're lowering the probability you lose the Bitcoin, yes, but you're not actually solving the problem. It's like you're getting closer to solving it, and that's good, and I support that. I support those companies doing that. But if I'm thinking from an inheritance perspective or from a protecting it against the $5 wrench or the 6102 or whatever, that's the only way to do it, right? If someone sets up a vault, but all three keys are in the same jurisdiction, or even two of the three keys, that's a single point of failure. The person is a single point of failure, all those things, right? So, um, anyway, yeah, I think we're still lagging a bit, but go ahead.
Um, I wasn't saying anything, but yeah, I think that's it, right?
Okay.
Once you really figure it out, once you understand that this thing can't, you can lose your Bitcoin by making a simple mistake, right? Once you figure out how collaborative custody works, I think it's a lot easier. But what the Bitcoin advisor is doing is that they're offering free appointments, free half-hour calls where they can explain it to you. They can explain it to you in depth. They can talk to you about the how it works. They can talk to you about the fee structure. It is a 1% annual fee, but over time, I believe they're decreasing it over time. I don't know that for sure,
Yeah,
but
yeah, yeah, degrading fee schedule from 1% down to 0.5% over
yeah,
time, and that's
yeah,
done because there's no upfront cost. Other multi-sig vaults, they might charge you $1,000, $3,000, $5,000 just to set it up, plus the annual fee. But Bitcoin Advisor, we don't like to have friction points for people because we know self custody is scary enough on its own. So that's why we do the 1% down then to 0.5% fee, which I'm really happy about, because really that means that all we have to do is help a client stack more than that percentage to be a net benefit, right? Basically, the way I like to put it, and you probably have said this too to your clients, is that um, when people sign up with us, they're taking the gamble that our entire team is going to help them stack at least 0.5% more Bitcoin on average per year, which in my view is such an easy target. From a tax savings perspective, from a setting up trust, setting up super funds, just all the things that we're able to do and help clients with that. It's not that it's better than single sig, it's just that it's different. And the difference with single sig versus what we're offering is that what we're offering is service based, which means that um, it's going to be extremely volatile along with demand. And so that's why I'm encouraging people to do it now, because pretty much nobody understands what we're offering, and that's okay. But what's probably going to happen is most people are going to realize I want 10% my stack in that setup, because um, when your Bitcoin's worth 10 times or 20 times or 100 times more than what it's worth now, you're going to want multiple setups, and most people are going to want the setup. And so, it's a service-based industry, and service-based industries do not scale well exponentially. So I don't know about you, Rajat, but in my view, probably only um, unfortunately, probably only the people with the most Bitcoin are going to be um, able to have these ideal services. Not because we don't care about everyone, but just because it's extremely dependent on demand. And that's why I'm encouraging people to do it now, because yeah, I think bull markets are not going to be kind to those that procrastinate their self custody. And it's not that I want that to happen. That's just the truth. So
and plus when Bitcoin is 100x from here, when Bitcoin is 7 million, $10 million, you don't want to keep it on an exchange, right? Your goal should be to take it off the exchange, take self custody, use collaborative custody, however you do it. Doesn't matter. I mean, we're not forcing people to take the collaborative custody. I think it is a good way to go for most people. But even if you have it on the exchange, take it off the exchange, put it in your own wallet, set it up. Doesn't matter how you do it, just get something done. Don't leave it on the exchange. Don't leave it on a hard wallet, or sorry, a hot wallet. Um, if you leave it on an exchange, it's like buying groceries and just leaving them at the store, right? This when you go back, those groceries may have rotten, or maybe somebody took them, or something may happen, right? But I mean, that's what happened with FTX clients, right? A lot of FTX clients, if they had withdrawn, I like to give this example. If FTX clients had withdrawn in October, they would have been fine, right? But if they waited until November, they waited until the second week of November, nothing left. It's
were you on
that
Twitter?
simple.
Yeah,
Go ahead.
yeah, I fully agree. Sorry, sorry
No, no worries.
to lag there. Were you on Twitter when that went down? Because I remember clearly. I probably never forget it. Like, the narrative was FTX was fine, and then there was like the final 72 hours. And the final 72 hours, to take your wonderful example and push it even a little further, if they withdrew 72 hours before it was all over, essentially they would have been fine. And the
Yeah.
warning signs were there. Like, CZ was using BNB, like it was pretty clear FTT was being dumped. Like, I remember I remember messaging people that I knew had a lot of money on FTX, and I was like, get out now, don't sleep on it, do it. I don't want to rush you, because I'm scared that you're gonna take self custody, you're gonna make a mistake in taking self custody, or whatever. That's the horrible thing. These people I was talking with, a mere 72 hours before FTX went under, they're like, well, crap, what do I do? Do I sell and take the capital gains when I didn't want to. I mean, I don't want to do that. I'm going to lose 15% of my stack. And so they get scared and they freeze, right? And then what do? Take self custody? I'm scared. I don't know how to do it. I've been procrastinating at 8 months or 10 months or years. Obviously, they haven't done it at that point because they have an emotional fear to it. It's like, it's such a terrifying thing. It's like, crap, if I take self custody, I might lose it all. If I do it on my own, I rush it, which I'm rushing right now, or I take a guaranteed loss of 15, 30, whatever percent on capital gains, or I leave it, I'll sleep on it. And then a lot of them did sleep on it. And then that was it. That
But
was
that's the
it.
thing, you wouldn't even have had to pay capital gains, right? Because you just move it to your own wallet. So there was no
Yeah,
incentive to leave.
yeah,
Yeah, right. There was
yeah.
no
I'm
incentive
saying
to
if
leave
they
it on
convert it to
FTX.
dollars.
Yeah, yeah, yeah.
Yeah, I'm
There
saying
was no
they could
incentive
have
to leave it
converted to
there.
dollars and get it off
Yeah,
the exchange, or they could have not. Yeah, yeah, does that make sense? Like, if they were scared of self custody so much, they could
yeah,
have converted to dollars, get it off the
yeah, yeah.
exchange, or they could, So that was the dilemma they had, and unfortunately, that dilemma, over the course of those hours, just was so sudden, so terrifying, deer in the headlights. People froze. A lot of people, I'm sure, took self custody and lost it because they rushed their education, and a lot of other people, most people, froze like a deer in the headlights, and you know they're getting money back, right? But they're getting the nominal, right? They're nominal versus real terms again, right? They're getting nominal payout back, but Bitcoin's up 4x by then. So even if they're
Yeah.
getting 100% of their funds back, they're still losing 75%.
Yeah.
So yeah,
Yeah,
horrible.
it's
Horrible.
I think it's really interesting to just go deeper and deeper into this just because there's so many things. There's so many things that you can discuss. There's so many things that you can talk about
Yeah,
and it never ends, right? The rabbit hole does not
right,
end. There's no bottom to the rabbit hole. It will keep
right,
going. So,
right.
yeah.
Well, I know you got a little long, and I feel a little pessimistic and sad at the end of this. So let's finish up with one more bullish question. Um, what do you think the price of a house in SaaS is going to be upon hyper Bitcoinization? We kind of talked about this before, but maybe dive into it a little bit more. Give us some bullish hopium to finish out this conversation.
I think, I mean, there's so many factors to consider. The fact that hedge funds own a ton of houses, financial institutions own a ton of houses. There's all these landlords who at a point it won't be profitable for them to keep their house, right? They're paying so much in interest. They're not even right now. I think it's cheaper to rent than it is to own, right? And that's gonna hurt a lot of people, right? Because there's people who I know a lot of people who are moving from Canada. I'm in Canada, so there's a lot of people who are moving from Canada and they're going to other countries, right? So of course, the Canadian government is bringing in more and more people, bringing in more and more people to keep pumping up these prices, but eventually the people who are coming in are going to realize this isn't where I want to be, right? Everything is so expensive. I can't even afford a house. Why wouldn't I just stay where I am? And that's going to happen. There's no way to avoid that. The population pump is probably going to come to an end. And I think by, I think, I mean, the numbers are just so wild, right? For all we know, Bitcoin could be $1 million at the end of this year. For all we know, Bitcoin could be $50,000 by the end of this year, right? Within 10 years, Bitcoin could be $1 million. It could be $100 million. Like we looked at the Nigerian numbers, right? We looked at the naira. I know the naira, of course, isn't as powerful as the dollar, but again, every currency is a shitcoin compared to Bitcoin. So for all we know, if Bitcoin is $100 million, a house might cost 0.005 Bitcoin, 50,000, or sorry, 500,000 Satoshis, right? Less than 500,000, maybe even 300,000, 200,000 Satoshis, right? Because what's happening is demand for Bitcoin, there's no end. There's no limit to the demand. There's also no limit to the supply of houses. Houses can keep appearing, they can keep being built. Over time, technology will improve. More condos will be built. More single family homes will be built. It'll become easier and easier. And what happens when supply rises and demand doesn't keep up? Price goes down. So we could see $100,000, 100,000 Satoshi house. We could see a 10,000 Satoshi house by the time Bitcoin is $10 million or $100 million, right? Uh, it's just both of them are just moving in the opposite direction, right? In terms of Bitcoin, both of them are moving in the opposite direction. They're going to move in the opposite direction. Um, houses will continue to lose value. Bitcoin will continue to appreciate in value. And none of that cash flow stuff matters. None of that tax benefit stuff matters. Because eventually those tax benefits will disappear, right? Because the US government will need money to pay off its debts unless it takes everybody's Bitcoin. So I mean, we could see 100,000, we could see a million Satoshi house, we could see a 5 million Satoshi house. That's the thing. The numbers can range so much. We could even see a 1 Bitcoin house, right? Even that is super cheap compared to what it is today. So
Yeah, yeah, that's the thing. We don't know, but even if it's 10 million sats a house, that's still an increase of 70x against real
yeah,
estate from today. If we go from 7 Bitcoin per house to 1/10 of the Bitcoin, it's 70x. So even if you're off by a factor of 10 or 100, that's still 70x from today, which is just nuts.
yeah,
So
insane.
hey, thanks. Yeah, thanks, man. Appreciate it.
Of course.
People, get your coins off exchanges. Don't make the mistake. Don't be too bearish. Be a Bitcoin bull and understand the possible incredible upside we have. Take self custody. Get some exposure to cloud of custody, unless you want to, only have one custody solution forever. But if that doesn't sound like you, click links in description where you can talk to us, and we'll be happy to help. And yeah, subscribe both to this channel with me and Rajat, our Twitters, all that good stuff. So thanks for taking the time. Appreciate it.
Awesome. Great talking to you, Luke.